Welcome traders to this week's analysis of US oil, crude oil. My name is Vic. Thanks for joining me here. So on US oil, if you have been following my analysis, we've been looking for a huge short position which was building up. If you follow me on TradingView or other places, then you might have seen this idea that I posted. Full analysis here that after going through this FCP zone there was another one, and then market was going to go to a certain level near about 74 area, and then a major short opportunity was coming on US oil. And since then the market has been falling. US oil has been falling from that level continuously, and it is not stopping. There have been few cases where it wanted to go higher, and this is what I covered in this analysis, where I said, the market could actually go all the way to these three levels. One was this trend line, second one was this level, third one was this higher level S&T8. Market went to this trend line and started to fall almost immediately. It actually went to the second level here and then started to fall back down. So that is the power of doing multi-time frame analysis using FCP methodology. So using that, we were able to identify that US oil was going to have a huge short position, and this is not over yet. The market can keep on falling for a long period of time, irrespective of what bloggers or what, important people have been saying. If you follow the media, then there was very important person who said US oil could reach $100 very easily, and the next day it started to fall, and since then it has been falling down. So what you should do is you should just look at the charts. Learn to look at the charts yourself. Don't trust anyone. Just look at the charts yourself, see what it is there, because if this is happening, then nobody can deny that oil has been falling down. Nobody can deny that. And with certain probabilities and techniques, you can actually identify a few patterns which can tell you about the next move with certain probability. Trading is all about probability. So what we have right now is that market has created this M pattern, and that means the market can actually push a little bit higher up. This is where the demand zone is, because the market was going upwards from here. You can also consider this as a support zone, or whatever, however you want to name it. Even though demand zones are not as support zones, they are completely different. But people use them interchangeably, so whatever you want to call it. But the idea is that the market has reached a level where it can actually push a little bit higher, and it can go all the way to test this midpoint here. But this market is still bearish, and it can fall further down. So you should not just be looking at this level here, but you should also be looking at this level, or probably this level here as well, because this M pattern this M pattern I'm talking about, this can actually turn into an extended one, or even more extended one. And in that process, this will also create a bigger M pattern. So we are still bearish, and I'll show you on VATA Envisage. If you have VATA Envisage, then you'll be able to see it for yourself. But let me show you what I mean there. Let me go to VATA Envisage. Okay, on VATA Envisage, if I go to the monthly time frame, we have huge bearish candle forming. This is an engulfing candle. That means the market is expected to keep on falling further down. Maybe for a month or so, it can go a little bit higher, but it is expected to keep on falling until it touches the mid of, not the mid, but the VATA curve here, approximately 54, 55 area or so. That is a possibility that it can come to on monthly basis. Okay, if I go to the weekly time frame, the market has reached its profit target on VATA Envisage. So this was our sell signal here. The market was bearish, red color here. This was the sell signal. This is the profit target. And after 1, 2, 3, 4 weeks, it has reached that profit target. And the second profit target, we know that is the touch of this water curve. So the second profit target will be approximately, let me just give you that level here, approximately around 59. So 60 level, $60 is some kind of psychological support it can provide. So that's why I'm saying it is right there, but it can push up a little bit, maybe for a few hours or maybe a day or so, but it can fall down to $60 as well. And if it pushes a little bit high, a little bit lower, then it can reach the next level, which is approximately around here, and that is 51. Let's go to the daily time frame. On daily time frame, this is the one that I shared in the Telegram group as well. This was the sell signal that we received on daily time frame. Market fell down, reached this support zone here, went higher, and then started to go back down, and then it reached this profit target. Last week it was able to reach its profit target, and the second profit target is around here, this white dot here on the left, that can act as profit target as well. So if I put a line here, this is approximately $60 or so. So it is expected to continue to fall to $60 because on daily time frame and also on weekly time frame we are getting $60 approximately, and $60 seems like a psychological number as well. So be careful. If it starts to go higher, that's fine. If you're day trading, then it's fine, but be careful. This structure may not hold. It can just keep on falling to the $60. If I go to the 4 hour time frame, still bearish, and this can actually keep on falling further down because everything is looking red at the moment. So that's what we have here. If you enjoyed this analysis, make sure you hit the like button and share it with other traders and trading communities. And if you are interested in VATA Envisage, then look at the description of this video and you'll find a link there and more details. And I'll see you in the next one. Have a great trading week next week.